Imagine waking up tomorrow knowing exactly how to transform your financial life. No more sleepless nights, no more debt weighing you down, or the constant feeling of being lost when it comes to managing your money. I'm sure you've felt like this before. I want to tell you that there is a clear path to changing this reality. Today, you're going to learn the 20 golden rules for financial success. This isn't just me talking. These are rules followed by all the men who have achieved a prosperous life. Don't leave before seeing numbers 8 and 3. I've seen many people who could have lived in abundance but failed because they didn't apply these 2 principles. Let's get started. 20. Money is a game. Money can be understood as a game where success depends on strategy, discipline, and continuous practice. Just like in a board game or esports competition, those who learn the rules and study the moves of the best players tend to stand out. When you approach your finances this way, the idea of accumulating and managing resources doesn't seem so intimidating. Constant practice allows you to develop skills to make faster and more precise decisions, improving your performance over time. However, like any game, there are different difficulty levels. At first, it's natural to feel lost or afraid of making mistakes. Every financial decision, whether it's about saving, investing, or spending, can seem risky. But over time, as you become more familiar with the concepts and understand how each choice impacts your personal game board, the game becomes clearer. The feeling of uncertainty transforms into confidence, and you begin to play with more strategy and less improvisation. 19. Critical timing is one of the most crucial elements in the financial game. As in many other areas of life, knowing the exact time to act can determine the final outcome. In the world of investments, this is even more evident. Often, patience and self-control are the most powerful weapons of those who want to prosper financially. Acting impulsively or out of fear of missing out can lead to rash decisions, while waiting for the right moment can maximize your gains and reduce unnecessary risks. This is similar to what happens in a poker game, where it's not enough to have good cards. It's essential to read the environment, the other players, and most importantly, the pace of the game. Similarly, in the field of investments, financial intuition and market knowledge help identify when it's the right time to enter or exit a position. The first move doesn't always guarantee success. Sometimes, waiting patiently until conditions are more favorable makes all the difference. 18. Positive attitude toward money. The way you view money can be a decisive factor in your financial success. Adopting a positive attitude toward it opens doors to new opportunities and strengthens your ability to handle resources in a healthy and constructive way. When you see money as something distant or even negative, you unconsciously create barriers that limit your potential for prosperity. Phrases like, "money is the root of all evil," cultivate a scarcity mindset, while a positive outlook can transform the way you attract and manage your finances. Money isn't just a medium of exchange, it's a tool that, when used well, can provide freedom and personal growth. By treating your finances with respect and attention, you begin to develop a sense of responsibility and control over your financial life. This doesn't mean putting money at the center of everything, but recognizing its value as a resource that can be well managed, just like any other aspect of your life. A healthy attitude involves seeing money as a source of possibilities, not a problem. This approach also means changing how you relate to money daily. Instead of seeing it as a challenge or constant worry, you need to nurture it with attention and positivity. This can start with small actions, such as valuing financial achievements no matter how small, and cultivating gratitude for what you have. By doing so, you begin to attract more abundance because your energy is focused on growth, not on difficulties. 17. Financial growth is a doubling game. If you have $1,000 today, you're closer to $1 million than you think. The secret to reaching big financial goals isn't about earning a lot all at once, but about consistently and strategically doubling what you already have. Financial growth is like a game of patience, and the winner is the one who understands that every step matters. Imagine this, with $1,000 in hand, you're just 10 doublings away from reaching $1 million. It seems simple, but it requires planning and, most importantly, patience. Chasing quick gains or risking more than you can afford won't help. The focus here is on growing steadily, without rushing. The game is long, and with each doubling, you get closer to the goal. Maybe when you double your first $1,000 to $2,000, you won't see significant changes yet. But consistency is what matters. Keep doubling, and soon you'll have $4,000, then $8,000, and so on. The key is understanding that financial growth doesn't happen overnight, but through smart decisions over time. Think of it this way: you don't need to risk everything. Just make decisions that allow your money to work for you in a safe and steady way. 16. The seduction of money. Money behaves curiously. The more desperately you chase it, the more it seems to slip away. This is because money, like a demanding person, prefers to be treated with calmness and strategy. When your financial decisions are guided by anxiety or an immediate desire to spend, the chances of it staying with you decrease. The secret is to change your relationship with money, acting calmly and confidently. Imagine that instead of impulsively chasing money, you start treating it with more respect. By making conscious choices and using money wisely, you show that you understand its value and that it's a tool for achieving bigger goals. This doesn't mean being stingy or avoiding spending, but rather putting your money where it can bring long-term results, whether by investing, saving, or planning your next moves. 15. Beware of the big check syndrome. Imagine you've just received a large payment, maybe a work bonus or some unexpected money. It feels amazing, right? You suddenly want to spend, buy something you've always wanted, or make decisions that seem harmless. But here lies the danger. This moment of euphoria can turn into a financial trap if you don't know how to handle it. Many people experience this. Upon receiving a big check, they feel a sense of reward and believe they deserve to spend a good portion of it immediately. The problem is, once the excitement fades, the money disappears quickly, leaving only regret. That's why it's crucial to understand that this large payment isn't a one-time prize, but just another part of your financial flow. The key issue here is avoiding what is called big check syndrome, which occurs when excitement drives us to spend everything before even thinking about the future. 14. Strategic partnerships. Imagine you're trying to build something big. It could be a business, a personal project, or even growing your investments. Sometimes, doing it alone seems like the quickest and simplest way, but the truth is that when you find the right people to walk with you, the impact can be much greater. Strategic partnerships have the power to multiply your opportunities, opening doors you didn't even know existed. Think of partnerships as a way to combine forces. When you join with people or companies that share your vision and goals, you're not just dividing the work, but also blending different skills, knowledge, and networks. For example, if you're great at sales but need someone with logistics expertise, partnering with someone who understands that area can accelerate your business growth. Both parties benefit, achieving together results that would be much harder to accomplish individually. A partnership can connect you to markets or clients that were previously out of reach. By collaborating with people who already have a solid base in areas where you want to grow, you can leverage these connections to expand your own reach more quickly and efficiently. Additionally, having a shared support network gives you more confidence to take risks on new projects, knowing you're not alone. 13. Strategic positioning. Strategic positioning is essential for financial growth. It's about choosing precisely where and how you will operate, whether in your career, investments, or the connections you build. Making decisions aligned with your goals can maximize your chances of success. In your career, this means opting for sectors and professions with high growth potential and future relevance. Invest in skills that the market values and that can increase your professional worth. In investments, positioning involves selecting opportunities based on solid analysis and growth potential, avoiding impulsive decisions. Knowing when to enter and exit an investment is a crucial part of this strategy. In relationships, surround yourself with people and networks that share your vision and can contribute to your development. The right environment can accelerate your progress and open doors to new opportunities. Positioning yourself smartly ensures that each decision brings you closer to sustainable financial growth. 12. Use leverage to your advantage. Leverage is one of the most powerful tools in the financial world, and knowing how to use it wisely can accelerate your growth. It allows you to do more with less, maximizing your resources and expanding your possibilities. Credit, for example, can be used to leverage investments or expand a business, provided it's well-planned and risks are controlled. When done responsibly, credit becomes less of a debt and more of a catalyst for opportunities. Technology is also a form of leverage. Automation, artificial intelligence, and digital platforms can multiply your impact without requiring proportional increases in effort or resources. 11. Diversification is for fools, but in moderation. Imagine you're in a market full of fruits. You might take one of each to ensure variety, but will you really enjoy them all? The same happens with investments. Many people think spreading money across numerous options is the best way to protect themselves, and to some extent, it's true. But if you invest in too many things at once, you may not earn as much as you'd like. Instead of investing a little in 15 or 20 different things, think about choosing a few that you understand and trust. Let's say you have $1,000 to invest. If you put $50 into each option, the gains may be small. But if you select 3 or 4 options that you've studied and believe in, the returns can be much more rewarding. The idea is not to over-diversify to the point where you dilute your earnings. By focusing on the right opportunities, you increase your chances of growth. You don't have to bet everything on one investment, but don't overdo it with diversification either. Choose wisely and be strategic for more consistent and significant growth. 10. Associate with people who make money. Have you ever noticed how, when you play a sport with someone more skilled, your own performance tends to improve? The same applies to money. Surrounding yourself with financially successful people can completely change how you manage your finances. Think about the conversations and ideas that arise when you're around people who understand investments, business, and money management. They talk about opportunities you may have never considered, share experiences that can help you avoid mistakes, and most importantly, motivate you to think more strategically. It's not just about learning from them, but adopting a new way of looking at money with more confidence and clarity. Just like a tennis player improves when facing stronger opponents, you grow financially when you associate with those who know how to make money grow. These connections expand your opportunities, your vision for the future, and most importantly, your ability to make better decisions with your money. After all, the environment you're in directly influences your growth. 9. Money needs to be in motion. Idle money is like a bicycle that's not pedaling. You're not going anywhere. If your money is just sitting in an account without earning interest, you're losing time and opportunities. Inflation erodes purchasing power, and by leaving your capital untouched, you're essentially watching its value decrease over time. To ensure financial growth, money needs to be in constant motion. Investing is key to making your capital work for you, whether in stocks, real estate, fixed income, or even new businesses. The important thing is to ensure that every dollar has a chance to generate returns. When you invest your money in assets that provide returns, you start multiplying its potential. Instead of just saving, make choices that keep your money active and contributing to your long-term growth. Keeping capital in motion doesn't mean taking high risks, but rather seeking smart opportunities where the returns justify the investment. The more your money circulates, the more it appreciates, putting you in a stronger position to reach bigger goals and achieve the much-desired financial freedom. 8. Have a secret account. Having a secret account can be one of the most powerful strategies for maintaining financial security. Unlike a traditional emergency fund, this is an account that only you know about, completely off the radar of other people or commitments. It serves as a financial superhero, ready to step in when unexpected situations arise. Whether it's a loss of income, an unforeseen crisis, or an opportunity that requires a quick decision, this account offers a safety net that no one can take from you. The purpose of this account is to provide peace of mind. It's not meant for everyday use, but rather to be carefully saved and used only in truly necessary moments. This secret reserve gives you freedom, because even in a crisis, you have a secure source of funds to maintain your financial balance. By keeping this fund away from discussions and out of any shared planning, you ensure that in critical moments you have an ace up your sleeve to protect your stability and stay in control of your financial situation. 7. Don't spend on luxuries. Until you have $10 million spending on luxury without first having a solid financial foundation is a common and risky mistake. The priority should be building a strong reserve that guarantees long-term security. Luxuries like first-class travel, expensive cars, or extravagant purchases can wait until you have significant wealth. The idea here is simple. Before focusing on spending money on non-essential items, you need to have your investments and reserves well established. Once your financial security is ensured, you can enjoy those luxuries without compromising what you've built. Prioritize growing your wealth now to enjoy it peacefully in the future. 6. Understand your taxes. Every year, many people just fill out their taxes without paying much attention, hoping the amount owed won't be too high. However, the secret is in understanding that the tax system is not just an obstacle, but also a tool. Those who know the rules can find ways to reduce their tax burden legally, keeping more money for themselves. Understanding taxes isn't just about avoiding headaches, it's about taking intelligent control of your finances. By knowing the available tax incentives, deductions, and planning strategies, you can minimize the impact taxes have on your earnings. Instead of feeling disadvantaged, you start playing by the rules, but to your advantage. 5. Stay calm during crises. During the 2008 financial crisis, the market was hit by an unprecedented collapse. Originating from the housing bubble in the United States, the crisis spread globally, leading to the bankruptcy of major banks and causing massive declines in stock markets. Panicked investors began selling their assets rapidly, fearing they would lose everything. This mass sell-off caused stock prices to plummet further, feeding the cycle of fear. However, investors who managed to stay calm and didn't follow the crowd saw a unique opportunity. While many were selling stocks at low prices, those with a long-term vision took advantage of the moment to buy severely undervalued assets. Solid companies, temporarily affected by the crisis, were being sold at prices far below their real value. Those who bought during the peak of panic, like Warren Buffett and other experienced investors, reaped enormous profits when the market recovered in the following years. 4. Study your politicians. Political decisions have a direct impact on the economy and, consequently, on your finances. Governments set fiscal policies, regulate markets, and influence the business environment in ways that can affect your money, whether through taxes, interest rates, or incentives for specific sectors. Therefore, studying politicians and their economic policies is crucial for anyone who wants to make more informed financial decisions. This isn't about choosing a political side, but about understanding how the actions and promises of those in power can influence your investments, business, and even your cost of living. A change in tax policies, for example, can directly affect your financial returns, while interest rate adjustments impact both credit and investments. Being aware of political movements allows you to adjust your strategies and either take advantage of or protect yourself from the changes that lie ahead. 3. Learn from successful investors. Studying great investors like Warren Buffett, George Soros, or Ray Dalio can be an excellent source of learning, but following their exact footsteps doesn't guarantee success. Each of these investment giants has strategies based on their unique circumstances, goals, and risk tolerance, which may be quite different from yours. The key is to absorb the principles they apply, such as Buffett's patience, Soros's global outlook, or Dalio's risk management approach, and adapt them to your own context. Learning from these masters is important, but you need to develop an investment style that suits your needs, financial goals, and risk profile. Ultimately, success in the investment world comes from creating a personalized strategy that fits your reality. 2. Focus on your own game, not others. Imagine managing your investments, and suddenly you see people around you making a lot of money with what seem like promising ventures. The temptation to follow what others are doing is strong, but you know that path might not suit your profile. Everyone has their own goals and risk tolerance, and what makes sense for someone else could be disastrous for you. When it comes to finances, the focus should be on your game, not others. While some people might take high risks or splurge on luxury items, that doesn't mean it's the right path for you. Staying concentrated on your financial plan, your goals, and the strategies that fit your profile is the key to building a solid future. Let go of comparison and keep your focus on what truly matters, your growth and progress toward your own financial objectives. 1. Go beyond market benchmarks. Beating market benchmarks may seem like a great achievement, but true financial success lies in meeting your own goals, not just keeping up with market numbers. Benchmarks are a reference point, but they don't reflect your personal needs, life plans, or financial objectives. Your focus should be on yourself. Whether your goal is to secure a comfortable retirement, buy a property, or achieve financial independence, that is your benchmark. Set your priorities and work to achieve them, regardless of how the market is performing. In the end, what matters is how aligned your finances are with your objectives, not just whether you outperformed an economic index. To truly achieve financial success, it's essential to focus on your own goals, stay calm during crises, understand how the tax system works, and use all these strategies to your advantage. Remember, the path to prosperity requires patience, intelligence, and a clear plan. Now, if you're serious about taking the next step toward wealth, you need to watch the next video that will appear on your screen. In it, I'll show you the 6 things that if you sacrifice for just 1 year, will guarantee you money and wealth for a lifetime. Don't miss this chance. This video could be what transforms your finances once and for all.